Hi, welcome to the Market Alert for Friday, the 15th of October 2021. So an interesting headline this morning. We've got the market is unstable. We're fully aware of that. The bonds and stocks were higher ahead of the option expiration. CTAs short and cash and treasuries. Don't know what the last bit means, but that's what the headline is for yesterday. This squeeze move higher plus OPEX removes substantial puts support. And again, the subhead alluding there that there's not much on the option selling side on the put side, from what I can gather. The other news for yesterday, very light for news actually. The number of Americans on benefits crashes to less than 4 million, down 25 million from a year ago. For the first time since early March 2020, less than 300,000 Americans filed for first-time unemployment benefit last week, which was a positive for the dollar, but it didn't really benefit from it. Also yesterday, whilst we're here, the crude oil numbers came out and showed a surplus of 6.1 million barrels. So where's the fuel shortage then? Is it just the drivers? But there's certainly plenty of crude oil around. It must be just the transportation of it that's creating the problems, but there's plenty of it around. Let me just have a look at today. We've got retail sales from the US at 130. Bank of America are forecasting that this is not going to be a non-event, or could be lower, and they've been right for the last 5 out of 6 times, which is why I mention it. Got the Empire Manufacturing out at 130 as well. And then at 3 p.m. we got the prelim UOM, and 5:20 we've got Williams speaking. A lot of Fed members this week, so let's wait and see. Also, we've not looked at it this week. The gold-silver ratio has moved lower, which means that silver is playing catch-up with the gold moving better, or moving percentage return-wise better than gold at the moment. Right, let's have a look at the Dow. Massive move yesterday to the upside. The market, no stopping it. We're trading up to this area of resistance to the left at 35. Well, let's work on 35,050 psychological level. Market getting through the 89 from this high to this low, drawn back for yesterday. And this is the all-time high. So once again, we're heading back to the land of stock nirvana, where the market will continue to make new highs, I suppose, until the tapering comes in. But that's where we are after yesterday's trading session. And when you see the 30-minute chart, it's just it was just up from the off, and overnight it continues to move higher. But yesterday's session, you can see that this also just moving to the upside. Bit of a spike up of 100 points in 30 minutes overnight, and trading up to yesterday's high, or just above it at the moment. In the DAX, we had a reasonable move as well, which you can see here, but it took I'll just switch to the 30-minute chart. There you go. It was late in the afternoon when the market made a significant move, along with the Dow. It just kept going up in the electronic session after the 4:30 p.m. cash cutoff. I can see yesterday morning the market up, retesting there. You can see them buying back in at the high of the previous day and the increase in volume, before then moving above the 5-bar moving average and maintaining this red bar here is a close below the 5-bar. That's the only other close below the 5-bar. In the 30-minute, the market just kept moving higher. And of course, the first one, we have the 89% retracement in the morning. In the daily chart, we're trading up towards the 89, 78 levels, drawn from here to here, projected back. We are at 62 at the moment, but I've obviously made a bit of a Horlicks there and deleted it, but that's where we are at the moment. But these two areas here of much interest if prices do continue to move higher from the open this morning. Meanwhile, overnight in the 2-minute chart, you can see how the DAX has followed the Dow. Moved lower initially. We had a bit of a gap here, but this has since been filled, as we can see over here, and price is trading up to Thursday's high and then just holding that at the moment. Needs to close above this high in order to move higher. In the precious metals, well, another update for the metals. Just grab this. It's here somewhere. Here we go. So yeah, in silver, managing to move higher once more as the dollar found a bit of weakness, but I'm expecting some sort of retracement here. We've been up for 3 days in silver, and that seems to be a bit of an unknown. You can see here we've got 3 days up, and then it was slammed. 1, 2, 3, slammed. Not 2 there, and then slammed. So yeah, there is a bit of a pattern there, isn't there, where it's been allowed to run for 3 days and then move lower. You can see there overnight, going back to yesterday's high, and so far we've broken the 23.50. We need to get back above this level if prices are to move to the upside today. Certainly gold not as strong yesterday, and that's why the gold silver ratio narrowed, because gold didn't move as high or have the same velocity as or momentum that silver did, and that's why you see the drop in the gold silver ratio there. So let's have a look at the dollar. It's in here somewhere. I get the right chart. There we go. So dollar down yesterday, trading to 89 and with some buying, which you can see there. So as the market came back, retraced down to 89 and found a bit of support. Still looking fairly weakish there in the 30 minutes. You can see the market trading at the DP level, so it's important that that DP level is broken if prices are to trade down to yesterday's low for the dollar. Okay, quick look at yesterday's market activity in a bit more detail. The futures market moving higher in the DAX and then slamming down to the previous day's high, which is what we saw in the 30-minute chart. Yesterday's high being an important level. And you can see that we sold off initially. It was a very quick trade, only 6 points as the market pulled back. We then had a second one, and this wasn't going down either. And was likely to bounce because of the buying coming into the market here, which you can see very high volume, and that's precisely what happened as the market pulled back. Again, I decided to jump out of this one and just wait and see what the market did. It was struggling. I needed a further shakeout through that support that we had to the left there, down to the high, and then once taken out, prices started to move back to the upside, and then just continued along this sort of sideways move, only a 12.5 point range, really quiet. Like I say, the most of the move was put on in the evening of last night. We had a bit of a move up to just 1 second. We had a move up to the before the news came out. Just lost control here of the. It's not playing ball for some unknown reason. I was trying to draw a line, but it's not. It's only allowing me to draw rectangles. Can't draw arrows. Oh, there you go. So yeah, the market moving higher up to the weekly jobless claims, which we saw came out at just 300,000, 25-month low. Not 25-month low, 25 million at one point, now 300,000. So yeah, and then choppy start to the afternoon as well, not too dissimilar from what we saw before. And then we had the crude oil, which we have seen is 6 million barrels plus, so not a lot happening in the afternoon. I wasn't here for all of the afternoon, so didn't miss a lot, did I, looking at this chart. Okay, that will do it for this one. It's the weekend, so have a great weekend. And let's see what happens today when we get the retail sales from the US at 1:30 p.m. As ever, thanks for watching. See you in the next one.